Ben ritrovati martedì mattina sul floor del New York Stock Exchange. In questo momento gli indici sono in territorio positivo, ma sicuramente potremo vedere entro la fine della giornata diversi movimenti. Ancora tantissima cautela, si guarda l'Europa, si guarda gli ultimi dati economici che per una volta hanno sorpreso positivamente. Ne parliamo con il mio ospite qui sul floor, come vedete come ogni martedì è Mark Otto, che è Designated Market Maker per Knight Capital Americas. Mark, thank you so much for being with us.
Great to be back. Thanks.
So, Mark, we are following closely the situation in Europe. Just minutes ago, we had a press release from the U.S. Treasury. So, the teleconference, they had a teleconference in Europe, the G7. They agreed to monitor closely the situation until the next meeting.
Yes, it seems as though the G7 was able to produce what exactly you and I are doing. They're just going to watch it until the next meeting. So the EU is set to meet on the 28th and 29th. So perhaps between now and then something will get done. We're going to have the Greek elections on the horizon as well. So, we're all apparently going to be watching news.
Yeah, and in 2 weeks, they're mentioning they're going to be like a G20. So hopefully, with the rest of the world, they can agree on something.
Yeah, there seems to be just a lot of headbutting going on, particularly between Spain and France, mostly against the Germans, which are reluctant to actually commit to Eurobonds or any type of an agreement that's going to have them binding to another country's debt. So we'll have to see how that pans out.
And so far, we don't see any dramatic reaction, at least here in the United States. So what do you think the market is thinking? We're watching closely Europe for sure. We're seeing economic figures in the United States. And this week, we have ECB, Bank of England, and then Ben Bernanke will speak on Thursday at the Congress. Do you think that the market is really waiting for the next signal coming from the central banks?
Well, it seems as though lately the market's been really moving off of knee-jerk reactions to news. I mean, earlier, last week we had news out of China. There was speculation that they're actually going to do something as far as spending exorbitant amounts of money to kickstart their economy. I saw like 1 to 2 trillion yuan were suspected to be actually spent. And then right behind it, reports out of Xinhua, their number one news agency, came out and rebutted it. And boom, the market reaction was massive swings both ways. So it seems as though everyone is watching news, particularly, what's going on in the Eurozone. We are going to be watching closely on Thursday when Ben Bernanke speaks. It seems as though everyone always says, okay, the Fed's probably not going to say anything much, and then boom, they give any sort of hint, and there is a reaction dramatically in the market. So.
And do you expect a hint? I mean, do you really think that the Federal Reserve can still do something for the market at the end of this month?
Absolutely. I think that as far as the U.S. economy is concerned, it seems as though they're going to have to go back to the toolbox if things continue to deteriorate here. Whether or not it is an election year, so that may come into play as well. The current administration, obviously wants everything to be going right as far as going into November elections. So that may come into play as well. However, certainly when the Fed speaks nowadays, more and more people are paying attention and tuning in rather than just discounting it.
And do you think that Ben Bernanke will ask for some help, to the Congress?
Oh, wow. Yeah, that's a very good question. I'm withholding myself from actually having any anticipation either way on that one. I am going to closely watch it. It's a developing situation that it's going to be more reactionary than anything. But speculation, it's a coin toss. It could be anything. So.
Now let's talk about valuation. It could be one of the reasons why we see the market going up this morning. Valuation is really low. I believe it's the lowest in 6 months. So yes, cheap prices, some interest on the market is back. Technically, we went down the 200 moving average, and we are back, up that level. What do you think that could mean? That we reached the bottom, we are ready to go up?
Certainly, a lot of people like to look at those moving averages. I believe 1284 was the 200-day moving average. So we broke through it, and it's now become resistance on the upside, which is evident today. 1277 is a support level going down, which we've sort of been pinging between 1277 and 1284. So if we were to break down from here, my next levels that I would look at are 1271 and 1265. On the upside, if we broke through the 200-day moving average at 1284, 1291, then certainly you would have to think that 1300 would be the next level going up. But it seems as though the developing situation in the eurozone is really dictating the pace. This morning before the G7, there was sort of good vibes as far as perhaps they get one step closer to some sort of an agreement. We did see the euro rally off the recent lows. However, some of those gains have come back in, so we're back at like 124.5 the last I was looking on the euro. So all these tell signs are you have to sort of put them together and to get a better picture.
And okay, of course, Europe will determine all the movements in the future, probably in the next few weeks at least. What do you think is the next catalyst here in the United States? Election?
Well, certainly that's going to be a developing situation for the U.S. economy. It will be in the back of people's minds as far as traders are concerned. Traditionally, in an election year, you're going to see some sort of a run up towards the end of the year, particularly as we get closer and closer to November. So if there's a quieting period as far as the eurozone and Spain doesn't fall off the map or Greece doesn't exit the eurozone off the election, then hopefully we can anticipate some sort of a catalyst to come through on the U.S. side. Obviously speaking, we've been closely scrutinizing the jobs data. So, we had an uptick on unemployment. So Thursday, we're going to be closely watching those numbers once again, which have been trending up from, the 350,000 level. And these claims are getting up towards the 400,000 level, which is a psychological point as well. So I think for Thursday, we're looking at 377,000 claims. We came in last week at 383. I think the range is 365 to 385. However, if those numbers are to creep up towards or above 400,000, that definitely would be bearish.
So Thursday is a very important day for the market between Bernanke and the jobless claim data.
Absolutely. Other than that, it's sort of a light macro week for the U.S., so those will definitely be the catalyst to actually move the market this week anyway.
Great. Thank you very much, Mark, for being with us.
Thank you.
E grazie a voi per l'attenzione. A domani.